Hello there, people of the internet. So today, I don't know if anyone would really pull up to this stream, to be honest. But I'm just gonna be watching. I don't, my friends are offline right now, so one of them is busy, and the other one is, I don't know, it just doesn't answer. So yeah, that's pretty much as of right now, right? So we're just gonna watch this for a little bit. I'm gonna try to do something. This might be a little sus, but I'm gonna try to do something. I'm gonna close this real quick just in case it shows something that I shouldn't be showing here. Um, because the thing is, if I run this script right here, if I run this script and I don't touch my computer at all, it's going to log in. Let's see. Let's give some time. It's okay. Let it do its thing. I don't care. Just like this. The thing is, right now, it's not fully working. So therefore, like, it's a bit bugged out in that sense, right? So therefore, there's a bit of a problem. See, this right here is what's very annoying, because like when this kind of stuff come up, like the fucking thing has no idea how to like get through it, right? So yeah, it's pretty much it's a little annoying in that sense. But yeah, I need to fix that real quick. Anyways, if I show you guys this one, so this one is basically like an outreach bot where it will like outreach to people that are already part of, like, let's say if you're already logged into LinkedIn, then it will do the outreach for you. You can see there's a bunch of images over here, not images, a bunch of messages that I would send. See over here, you can see that over here. So pretty much, yeah, that's what this does. And I need to make sure this is running on an automated basis, and with the help of AI, basically have like a fine-tuned model. Anyways, that's besides the point, right? I don't know what the fuck is. Oh yeah, it was I think it was anyways, let's look at the other one. Oh yeah, I forgot. I need to do my daily routine, you know what I'm saying? Insta, I think it was Insta. Can't remember which one it was. It wasn't tweet. I'm pretty sure it was it this? Yeah, it was this. I should be able to run node follow, and this should be able to, yeah, I'm just gonna give it. Okay. Copy this. I'm going to copy this, and then I'm going to paste this over here. And now let me wait for the thing to be done. So it's gonna log into that account real quick. And I'm not touching my computer at all. I'm just gonna let it do its thing, and pretty much see what it does. Because right now, as you guys can see, it's bringing in more and more followers, obviously. So let's see what it does, and so it's gonna go into softcap memes because I gave that as like the name of the profile that it needs to follow from. Let's come on, open the followers, and then now start following. Cool, great. It's gonna keep following until it hits like a certain limit. So it's just gonna keep repeating this. Might have like a, yeah, there's like a 5-second delay, not 5-second, like 3-second delay after the first one. So let's wait for this to be done. So pretty much what I'm gonna do here. Yeah, so let's see. It's basically following these people on an automated basis. I'm not touching my computer at all. So it would just do the thing for me, you know what I mean? So let's see how this sort of clicks through the whole thing, and then sort of gets the, just follows random people. So it's pretty cool in that sense. I hope it doesn't run into some sort of weird roadblock though. Need to make sure this is like running on an automated basis, right? So yeah, let's wait for cancel that. So if there's any roadblock, you just wanna get over it. Why is it? Okay, there we go. So I have my hands right here, so you guys can see. I'm not doing anything. It's basically, I can like show you my mouse right now. So if I just do this, yep. Okay, there we go. So pretty much, I just gotta wait until it does its thing. Let's wait for it. And once that's done, Let's wait for it. Let's wait for it. And should be done in a bit. Zucchini fried rice. That's crazy. I think it's done. Okay, I think at this point, I think it's done. Yeah, there you go. Hourly limit reached. Okay, cool. So what I'm gonna do now is look for how many people started following back. So these are, so there's like too many people. I haven't run the unfollow script, but it's running through this. So I have to run the unfollow script in like 48 hours. So that way it unfollows the people that don't follow back type of thing. So yeah, pretty much the engagement's okay. It's not the greatest. But like certain videos, like certain types of videos actually do pretty well. That's what I know for a fact. So yeah, if we can grow this, because I'm pretty sure this softcat memes was not there for a long time. It was just sorry. Softcat memes was there for like, yeah, September 2021. So it wasn't like a very long time. They have like 3.1 mil. So I'm pretty sure they use something like this and they're selling these stuff. See? If I go over here, they're basically doing this. So this is like a dropshipping store, except they have like a unique value proposition. So they're basically doing this. You can choose like an image of like a pet, and they're basically selling this. So it says 6K, but see, this is what they're doing. And yeah, it's pretty cool. The store is not the best looking, but it does make sales. So I know that for a fact because I checked it once. I can't remember. So they're selling these stuff right now. So pretty cool. I'm pretty sure this is like some sort of print on demand type of thing because like you just have this and then it like sort of this sort of append the image of the of your animal to like whatever they want, whatever you want, like a pillow. See, it's actually pretty cool in that sense because they have this Instagram theme page which is basically good traffic for this page. I mean for this store. So yeah, they don't really need to hold on to these items. It's basically dropshipping. So that's what I'm trying to do. This is like one of the other pages. I don't know when I created this, but it's there. But yeah, on a real note though, if I switch accounts real quick, okay, it's not this one, it's the other one. But yeah, I can't log in right now because it's okay. There we go. So the hour limit. Make a Fortnite video. I will for sure on the 2nd of when chapter 2 comes back. For sure, I will make. Benji, what's up, man? I will make one as soon as chapter 2 drops. That's on like the 2nd of November, right? Yeah, it's November. I just realized it's almost November. Holy shit. That's crazy. Yeah, I just gotta close this right now because I can't run it right now. But yeah, so what this is gonna do, so if I go back to what was my page? Kitty Kingdom, I think. I think it was Kitty Kingdom. Yeah, there we go. So I'm just gonna follow it from this page as well. Hopefully Instagram doesn't like flag me, but yeah, it's pretty okay right now. This is okay. It's not looking too good right now, but it's okay. Let's give it some time. Anyways, besides the point, I gotta get an export of the store that I made so far, and after that, I actually have to try and get this LinkedIn bot to work. So if I have this LinkedIn bot working, then I can like send outreach messages. So that's gonna be pretty cool. So yeah, I have this sent. I'm pretty sure it should be in my mail at this point. Contact. There we go. So it should be somewhere here. Should get the Shopify thingy pretty soon. It should be here in like any second now. Yeah, there we go. So this is the theme. As you guys can see, you can just download this from here, so it's fine. Pretty sure you can download it. Yeah, there we go. So yeah, that's pretty much what I'm gonna do for now. Yeah, so apart from that, so yeah, that's pretty much. I just want to enjoy this video just for fun by myself. You know what I'm saying? Some shit. Uh, let's see. Yeah. Let's see. Let's see. Market structure. So this is like the market structure stuff. The market structure stuff, basically, as you guys can see, this is the journal. That's okay. Try locally. Follow outreach. Out of credits. CQ journal. Hmm. Yeah, so in my journal, I'm gonna start writing from like tomorrow because I have my trades so far this week, but I didn't really write it on my journal. If you look at the fellow trading journal, I didn't really write on this, so I'm gonna do it all together tomorrow. Like for this week, I couldn't really journal, so I need to make sure I do that right here. Yeah, so it's pretty much as of right now. Yes, I gotta finish that up. For that, this is the idea. So market structure, whether it's bullish or bearish, continuation on a pullback phase. Multi-time frame concepts like a high time frame narrative. So top-down analysis basically. Premium and discount, buying from demand and discount, selling from supply and premium. So yeah, this is like basically supply and demand basically. Okay, discount is part of demand, demand is part of discount, and supply is part of premium. Mitigation unmitigated, part of supply and demand chain. Liquidity, swap liquidity, inducements percent. Okay, order flow with or against. So against is basically a pullback phase, and with is basically a continuation. Okay. So liquidity, swap liquidity, inducements percent. So inducements, usually if there's no swap liquidity, then there's usually an inducement, because if you see some sort of entry, it's something like this. Let me show you guys. So if I show you guys like this, so let's say, okay, let me just draw this, right? Canva.com. Let me go back. Canva draw. And yeah, pull it up, guys. Give me a second. I don't know what's up with my camera. I think it should be fine. Okay, so basically, right here, if I show you guys this real quick, let me just grab this to the side, so it's easier. Okay, so over here, right? Pretty much, if this is the swap liquidity or inducements percent, yeah. So basically, let's say there's a sell side liquidity level, right? Let's say like this is like a swing low, and this is swing high, right? Usually if you sweep this liquidity, it's gonna usually do this, right? Swap liquidity, just like this. But then the thing is, okay, sometimes you have these order blocks, right? Like let's say there's an order block here, and there's an order block here. I mean, there's a candle here, and you sweep the low. Keep in mind, if you sweep the low of the previous candle, that's when this is a good order block, and you have a fair value gap here. So that's as in you have this candle here, and you have another candle here. That's pretty much when it becomes a order block, right? So over here, this is the level right here. So let's say imagine this wasn't there, right? I'm just gonna grab this real quick, and imagine we had one candle. Okay, let's say we had this candle over here. Sometimes this happens, right? You can't avoid it sometimes. You would see a change in state of delivery, as in you would see one of these, and then you would see one of these, which is made above, slightly above this, right? So the thing is, sometimes it does this, so that way it just like pulls back, right? Pulls back here, puts this, and then it starts going up, right? So the thing is, this pullback entry, right? So the pullback entry, the problem with this is sometimes, as much as like this might be like a continuation, this could also be an inducement to really just sweep the liquidity and then go, right? So the thing is, there's a high likelihood of this happening if it's within. So let's say, for example, let me show you guys something. So if it's within, let's say, okay, so let's say this is part of, this is 0.5 and 0.5, and this is like part of premium. So this is premium, and this is discount right here. This is 0 over here. So this is basically the point where like this type of thing, like the smart money trap, usually happens if it's above 0.5. Usually at the range is about let's say this is like 618, so 0.6618, and sometimes even 0.710, 71% and 61.8%, in other words. So basically right here, if you see, let's say you're following order flow in this case, like the best spot you can really TP here, TP is actually the equilibrium, right? Because anything that happens in premium, even if it like goes here and then just like flips on your head, or if it goes like this, it's fine, because at this point you pretty much get out when the market's supposed to be getting out, right? So you can see this breaker structure, you can see the market structure shift, pull back, right? Pull back, and then you take it towards this. So if it's using this 0.5, right? 0.5 as a considerable level, then you can plan on using sorry. What's up with this? I don't know what's up with this. But if it's using 0.5 as like a considerable level, you can pretty much use this level as a point of interest, because 0.5 it's used as an point of interest. Then you can pretty much call it that, as in if it's used as a support level, right? Sorry, my head's streaking right now. But yeah, this is basically that. That's the narrative, if you guys can see that. So yeah, it's basically gonna TP here, and it's gonna go all the way towards the 1, right? This is the 1. This up here. So anyways, that's pretty much as of right now. What else? Yeah, so this is the 0.5. This is if you have the how do I explain this? If you know what you're doing, just go for 0.5. So if you're entering from discount, you want to go for a 0.5. So let's say you entered here, you just want to put your stop loss somewhere here, stop loss, and then put your TP at this 0.5. And then let's say, even if the worst case scenario, if you have something like this, it's fine, right? Or if you have something like, let's say, even if it uses this as support, then yeah, that's perfect, because it will go and hit 1. But you don't want to be like depending on this. You just want to get out before it's 0.5 in the current dealing range, and then get in again if you see an opportunity with the fact that 0.5 is being used as a support level, right? So if this is actually being used as a separate, as like a proper level, as in like something like this, like a breaker structure, and then you see a 1 minute market structure shift, and it's actually taking this level. So in that case, this level is holding, right? Which means we most likely are going to complete this full cycle, right? Which means it will head towards the highs, okay? So either way, even if you have like the best trade, let's say you have like a 1 to 10 type of ratio, getting out here at 1 to 5 is actually the perfect risk to reward, okay? Because you get out just in case something goes wrong. It doesn't flip on your head, because it only flips on your head once it's in premium, because premium is basically like the interest, the point of interest for like even short selling, right? So people who are trying to short sell will also get into the market. So that's what influences the price to sort of move in the opposite direction. You get what I mean? Because they are also waiting for discounted prices, because if you look at it from a shorting perspective, this is discount and this is premium. So they want to get the best prices. Therefore, they will wait for you, wait for the discount prices, and thus, because there's a lot of liquidity coming from here, it will cause the market to go down. Okay, simple as that. So that's pretty much what I want to show you guys. That's why I told you this is more likely to happen even after this happens. This is more likely to happen, the smart money trap, during premium. Okay, this happens during premium. Not all the time during premium, but not all the time during discount either. Okay, so it's basically down to probabilities at the end of the day. But yes, this is what's gonna happen. Okay, so again, smart money trap. Okay, smart money trap, and on correlated assets like NQ and ES, it's usually the SMT divergence. Okay, smart money trap divergence, the division in the correlating assets. If one makes a lower high and the other makes a higher high, that's the lower high, and then sorry, what was it? The low high, and then the other one makes what? Higher low, like this. Okay, this is a divergence. Let's say this is NQ, and this is ES. So you see this is divergence right there. So you just want to use this confluence with regard into this in parallel to see which one is going to what's really happening there, right? So this is just a divergence, and you want to use that as a signal. Again, that's a smart money trap. That change in the two assets. It's a smart money trap. Okay. Anyways, besides that, what I need to show you guys is so this is the systems that I'm building right now, right? Just to reflect, I guess. For LinkedIn outreach, I have an outreach and a connection bot, which will connect and outreach to people. Once after a while of connecting to these people, it will outreach if they are part of my connections. Okay, actually I'll draw this the other way around. Connections plus outreach. So if they connect with me, then it will outreach. Okay. Then also have Instagram, which is basically an Instagram bot where it follows. And if they don't follow me back in 48 hours, then it will unfollow from Instagram. Okay, follows, 48-hour follow back, no follow back, unfollow. Okay, that's basically what this script does, and that's the best way to grow an Instagram page organically. And apart from that, that's basically just to get community. So I'm creating something very similar for Twitter as well. So follow, 48 hours. If they haven't followed me back, unfollow. Okay, simple as that. Follow, 48 hours, unfollow. Simple as that. This is basically the best way to grow on any platform. Okay, Twitter, TikTok, any social media platform for that matter. I'm not very familiar with Facebook, so Facebook ads is the only thing. So Facebook ads, I need to run the Facebook ads for dropshipping, and I have 3 ads. Anyways, I'm not gonna get into too much detail here. Yeah, this is Facebook ads. So I'm going, the reason why I do this is actually for SMMA purposes, just to find clients through this outreach that links back with SMMA. Anyways, apart from that, we have the trading, of course. I was gonna call it this one. That one is journaling plus strategy, refining strategy, RS. So journaling and refining the strategy and trying to, plus increasing the win rate. So increasing win rate. That's pretty much for trading, right? Apart from that, the crypto, you just keep an eye on the news and just invest. That's basically just community news, right? You just go on Twitter, open Twitter. That's all you gotta do. Yeah, that's pretty much what I'm doing right now. I wanna grow my SMMA type of thing. I don't know if we're gonna branch it to SMMA or anything else, but as of right now, I'm having this bot do this, connect with people, and then outreach with small businesses especially. So yeah, let's see what we will turn into. We could either turn into software or SMMA. That's it. Okay. So this is for Instagram, for follow and unfollow strategy. Twitter, follow to unfollow strategy. This is the what was this? Oh, this is Facebook ads. That's for dropshipping and trading. We have the journaling and the refining strategy part to increase the win rate. So yeah, in trading, right? In trading, all I have to tell you guys is stick to 0.5 rule. 0.5 rule. Supply and demand. Unclaimed supply and demand. US unclaimed supply or demand. Okay, USOD. And 1 minute MSS. This is all you need. Okay, 0.5 USOD, 0.5 current dealing range, CDR, current dealing range, USOD, 1 minute market structure shift, 1 minute market structure shift, current dealing range, and time. Time is the session. Okay, best is NYAM. NYAM. So if Asia consolidates, London manipulates, then if we see a reversal, then NY will distribute. So this is Asia, this is London, and this is NY. Okay, this is London, this is Asia, I'm just going to call it Japan, and this is NY. This is NYAM, okay? NYAM. It's going to go and reach for whatever the high BSO draw is. BSO. So this could be a BSO draw, any type of high, swing high, daily high, previous day high, weekly high. Not weekly high, previous day high, okay, at most. That's basically what I want to show you guys. But that's if we have a change in state of delivery over here, okay? With this pullback, market structure shift over here, that's combining this theory over here. Buy sell liquid draw, TP, just like that. And that's pretty much what I want to show you guys. And yeah, that's basically as far as trading goes, right? So trading is not that complex. What is complex is life itself, right? Passing a challenge is like use the 1% rule with every trade, 1% per trade, and 2 trades a day, 2 times per day. And yeah, this will make sure you only lose 2% every single day. That should be manageable. And stick to 1.1 to 2.5 minimum risk to reward. Maximum 1 to 5. Okay, that's considering that aligns perfectly with 1 to 5, 0.5. Okay, because the maximum you'll get out of that is 1 to 5. Okay, again, little rules that I want you guys to remember. And whenever, let's say you went into drawdown, even if you're good in profit, you don't want to increase this 1%. You just want to make sure you get a bigger account size. You know what I mean? If you lose once, if you go into drawdown once, you risk only 0.5%. If you go into drawdown again, if you have 2 losses in the drawdown, you risk half that. If you lose even more, you just want to risk even lower and lower and lower. The point of this is you need to have at least a 10k account, 10k prop firm challenge. At first, if you're just starting out, don't buy this. Okay, to anyone who might see this, do not buy this as soon as you're starting out, because 1% of 10k is basically $100. Okay, $100 per trade. So that's actually a pretty good level to breathe with, because even if you had to go into drawdown, that's still 50. Even if you had to risk half that, that's 25. Because that's literally this and this and this. Okay, so again, that's if it's drawdown, but if not, you can make way more out of this $100 that you put in. But before any of this, do it on a 2k account. If you can master 2k account, that's when you can master a 10k account, because only the ratio of the number increases, right? Nothing else. So make sure you pay attention to this. And time and price. So time and price are just this basically session liquidity. Okay, again, same way, during let's say Asia consolidates, London manipulates highs, and then you see a change in state of delivery here, right? Then this is during NY, then boom, you have a sell. Okay, so this is I'm going to call this J, and this is L, and this is N. Okay, NYAM. NYAM. Cool. You sell. Just like that. Pull back. Entry here. Sorry, entry here at this range. Put your stops here. And then target whatever the low is. Okay. This could be a daily low. Whatever you want. Okay. That's basically what I want to show you guys. Just in case anyone sees this video, right? Just sort of reminding myself as well. Something that I want to learn right now is... Give me a second, guys. I'm gonna watch Justin Verlaine's video on this matter. Right? Justin Verlaine's video about the trade that he took. That was actually pretty good. Appears pretty slow. I don't know what's up with this. Yeah, right there.
This guy picked up his Tinder date, but she didn't know he was secretly a professional driver.
This is how I made $3,000 today trading NQ. I'm going to run you guys through exactly why I took this trade, what was my bias going into the day, what was my confluences that I had for this. So enough talking, let's jump in and talk about the actual trade, why I took it. So first thing, I want to play kind of going into the morning, what I was looking for, what my bias was.
What was that? Where's that coming from? What? Where did that come from? I didn't hear that because I didn't have my headphones on, but I have no idea how that came through. But let me just watch this real quick. It's the 1st of November. Holy shit. Wow, let's go.
That we've had so far for the week has been classic expansion, meaning
let's go. It's the 1st of November.
Chalking.
Isn't it like Halloween or some shit? Halloween. Oh, it was yesterday. That's crazy. Isn't it like today in the US? I'm not too sure. Fuck it.
Let's jump in and talk about the actual trade, why I took it. So first thing, I want to replay kind of going into the morning what I was looking for, what my bias was. So starting on the bigger time frame, looking at yesterday and sort of just the order flow that we've been having on the 1 hour time frame is yesterday we ended up selling all the way off. And the classic expansion, or the profile that we've had so far for the week has been classic expansion, meaning Tuesday came up, took Monday high, and started to displace to the downside. This means I want to see this become the high of the week and see an expansion lower Thursday through Friday. And looking at the 1 hour, we had sell side liquidity resting below us, and I wanted to see a continuation towards the downside. So in London session, Thursday through Friday. And looking at the one day came up, took Monday high and started to displace to the downside. This means I want to see this become the high of the week and see an expansion
Yeah.
yesterday. And sort of just the order flow that we've been having on the 1 hour time frame is yesterday we ended up selling all the way off. In the classic expansion, or the profile that we've had so far for the week has been classic expansion, meaning Tuesday came up, took Monday high and started to displace to the downside. This means I want to see this become the high of the week and see an expansion lower Thursday through Friday. And looking at the 1 hour, we had sell side liquidity resting below us, and I wanted to see a continuation towards the downside. So in London session, we ended up rebalancing higher, and we ended up taking this internal high to the left of us from which was the previous rebalance into this 15-minute fair value gap. So we moved lower, came back up, took the high, and we ended up putting in an SMT here. So we're currently now in everything that I'm looking for my model is a bigger time frame imbalance getting rejected, right? Some sort of manipulation. So the SMT is put in, meaning I want to see that high become protected, and my drawn liquidity is lower, right? Bigger time frame, we have sell side resting below, we displace to the downside, order flow is bearish. So going into the morning, I really wanted to see if this 5-minute fair value gap was going to hold bearish, or if this 15-minute fair value gap was going to hold bearish, and I wanted to see a continuation towards all of the generated sell side liquidity that we have had created in the morning. So now that we're in this rejection area, I need to see a change in the state of delivery to the downside. I need to see a change in order flow from this move higher. So zooming in the 15-minute fair value gap, the first thing I want to see is boom, this 5-minute fair value gap gets ran through to the downside. And the next thing I want to see is a change in the state of delivery. And the change in the state of delivery is the last series of up close candles. So these last two candles we end up closing, and I'm waiting for a close below this candle wick low. So I'm watching, I'm waiting, we end up waiting, and boom, we end up closing below. So at this point in time, I'm looking for a move back up to enter in short. I end up entering in short right here at the change in state, and I put my stop at the recent high, which was this 20,404 level. So the basic reason for this is drawn liquidity on the bigger time frame is lower, right? Because the best trades we want to take is when we can align the internal model with the external model. And this is the internal model in which we're looking for just by itself. We're expecting to see sell side of the curve here. So we've had everything that I want to see. Manipulation at the highs, SMT, rejection of a bigger time frame imbalance, and we're moving against the drawn liquidity, right? For the market to move higher, we must move lower, and for the market to move lower, we must move higher. So we've moved higher in this move, we've rebalanced to the inefficiency and
the
drawn liquidity, right? For the market to move higher, we
yeah, that's true.
must move lower, and for the at highs, SMT, rejection of a bigger time frame imbalance, and we're moving against the drawn liquidity, right? For the market to move higher, we must move lower, and for the market to move lower, we must move higher. So we've moved higher in this move, we've rebalanced to the inefficiency, and now I've seen everything I wanted to see. 5-minute fair value gap has been ran through. That's an entry alone if you're taking it as an inverse, and we've also had to change the state of delivery. So I've seen now everything I want to see. Now I got a question on this. I took this entry before market opens. Market opened. We mark at 9:30. Market opens at 9:30 right here on this red line. I took this trade beforehand. You might be saying, Justin, isn't that not good? Why can't you why are you taking an entry before market open? And I want you guys to understand this. The market will move consistently towards the already existing drawn liquidity. So when market opens, all it's doing is inflicting volatility into the marketplace to already do what we expect the market to do, which is distribute liquidity throughout the marketplace. So I'm totally fine holding this into the open because I expect the market to do what it's already going to do, which based off of the price action is sell off. We have an SMT. We reject the bigger time frame imbalance. Order flow is bearish. Our drawn liquidity is lower, right? So what I'm expecting the open to do is just push us there faster. So I take advantage of that. So my first price target, which I'm looking for, is I'm not looking for a big move. I'm looking for what I'm confident with. And the first confident is this base. We expect the move. That's an entry alone if you're taking it as an inverse, and we've also had to change the state of delivery. So I've seen now everything I want to see. Now I got a question on this. I took this entry before market opens. Market opened. We mark at 9:30. Market opens at 9:30 right here on this red line. I took this trade beforehand. You might be saying, Justin, isn't that not good? Why can't you why are you taking an entry before market open? And I took this entry before market opens. Market opened. We mark at 9:30. Market opens at 9:30 right here on this red line. I took this trade beforehand. You might be saying, Justin, isn't that not good? Why can't you why are you taking an entry before market open? And I want you guys to understand this. The market will move consistently towards the already existing drawn liquidity. So when market opens, all it's doing is inflicting volatility into the marketplace to already do what we expect the market to do, which is distribute liquidity throughout the marketplace. So I'm totally fine holding this into the open because I expect the market to do what it's already going to do, which based off of the price action is sell off. We have an SMT. We reject the bigger time frame imbalance. Order flow is bearish. Our drawn liquidity is lower, right? So what I'm expecting the open to do is just push us there faster. So I take advantage of that. So my first price target, which I'm looking for, is I'm not looking for a big move. I'm looking for what I'm confident with. And the first confident is this recent low, and then I'm looking for the continuation to the downside. So I'm waiting. Market opens right here. We initially pull back right before open into this 1-minute fair value gap. We hold bearish, and of course, boom, right at open, we see that influx of volatility pushing towards the already existing draw. First PT hit, second PT hit, and literally within the first 3 minutes, we get around 100-point move to the downside. Exactly what I was looking for, just selling off. And this is the best.
Right before open, you see the smart money trap. So during NY, right, you have to mark 3 things down. So it's usually, first of all, we have a smart money trap, right? Clear manipulation. And this is a smart money trap. And then you see a change in state of delivery, CISD, which is basically right here. If you guys see the change in state of delivery right here, see, this is parallel to this candle right here. You see this huge move downwards. This is not counted, this is just a wick. Move downwards, right? Displacement, proof. Okay, there's a pullback, but you don't want to entry on the pullback. You could entry on the pullback once you see the market structure shift here, right? And then you could additionally entry somewhere here, put your stops here, and then sell off. Okay, so this is the closest price drawn liquidity, so that's possible.
Type of trade. The best type of trade is when you have the confidence, you have the conviction, and the market just gives you it. And we get around 100-point move to the downside. Exactly what I was looking for. Just selling off, and this is the best type of trade.
SMT, yep, just like that. Take out the SMT at the highs. Overall bias is bearish, so we take out the highs of the SMT. Now we have this this change in state of delivery right here. Change in state of delivery. You have this pullback, 1 minute market structure shift. Okay, 1 minute market structure shift. You wait for extra confirmation, which is really good. You wait for this, and then you tap back, and then you take this closest liquidity draw, liquidity first draw. Second draw is basically these lows right here. Right, so this is on the 1 minute chart, as you guys can see. So that's pretty cool.
The best type of trade is when you have the confidence, you have the conviction, and the market just gives you it in a second, where it just pushes straight to your PT. And that's how you know you are aligning time and price. The market moves algorithmically. The reason why market opens and we dump is because we're in an area and the market literally shows us that we plan on dumping. Everything in this chart shows us we want to go lower. There's sell side resting below. We're rejecting a bigger time from a balance. We have an SMT. And it shows us that we plan on dumping. Everything in this chart shows us we want to go lower. There's sell side resting below. We're rejecting a bigger time from
Yeah. Yeah. Overall bias is bearish. Right? Bias is bearish. Higher time frame. Higher time frame. Yeah, there you go. So in my case, it's 4 hour. And yeah, that's pretty much the confirmation that we need, right? So then once we have this, we should be fine. Yep.
a balance. We have an SMT. And in London session, we moved against the opposing liquidity pool, which means we want to see manipulation in this area to see a continuation. Not only that, we have an SMT. And in London session, we moved against the opposing liquidity pool, which means we want to see manipulation in this area to see a continuation. Not only that, but what are the 4 reasons why markets move? We hunt liquidity, we rebalance inefficiencies, we rebalance equilibrium, and we generate liquidity. What are we doing on this move higher? In London session, we're moving back to equilibrium, we hunt liquidity, we rebalance inefficiencies in the liquidity pool, which means we want to see manipulation in this area to see a continuation. Not only that, but what are the 4 reasons why markets move? We hunt liquidity, we rebalance inefficiencies, we rebalance equilibrium, and we generate liquidity. Liquidity, we rebalance inefficiencies, we rebalance equilibrium, and we generate liquidity. But what are the 4 reasons why markets move? We hunt liquidity, we rebalance inefficiencies, we rebalance equilibrium, and we generate liquidity. What are we doing on this move higher? In London session, we're moving back to equilibrium of this previous range, right? The entire move from Wednesday into London session, and then London session opens and we continue to move back higher. What are we doing? We're rebalancing not only the inefficiency, not only are we rebalancing equilibrium, but we're also generating all of this sell side liquidity, right? All of this.
Not this, my bad.
This low, this low, this low, this internal low. We're generating all of this sell side liquidity to set up for a New York continuation to, right? All of this low, this
Yeah, so this is the 5 minute. Okay, so this is the swing high to swing low. So you see at 0.5, this is when we have the reaction, right? So usually if we see one of these, if you see this swing high to swing low, and you see this 0.5 right here, you can see that this is the change in state of delivery over here because it rebalances, it had this SMT. The SMT is down, right? This is during, right before NY opens. So SMT is there, right? SMT is there. CIST is there. Okay, CIST is there. So then you have this range. Equilibrium is there, right? This is the dealing range, swing high to swing low. Equilibrium is there. Now we have this conviction, right? I'm assuming Asia consolidated, London manipulated. Now London manipulated. Now we had this move higher with during London. And now we have this sell-off during NY because London manipulation, Asia's lows were taken out, right? I'm assuming that's what happened here. I'm not too sure what went here, but I'm assuming Asia had some sort of level generator because it's 1 minute, right? London took out the lows, right? Yo, what's up, man? How you doing? Good shit, thanks, man. So yeah, I'm assuming this is Asia. Let's just assume because right now I can't see what this is, but let's assume this is London, right? London takes out Asia's lows, and then this is basically NYAM. So NYAM comes back, smart money trap, right? SMT, and then CIST, change in state of delivery, okay? And then we have the real move down towards the sell side liquidity draw. Why? Because it's aligning with the high time frame narrative of bearish, okay? Because this is below 0.5, so therefore this is discount in a shorting perspective as well. Good. So that's why it goes and hits, because this is used as a support of level of support. So if we use this as a level of support for a second time, it's gonna hold because that level is holding, right? And it aligns with the overall narrative. So that's pretty much what's happening here.
Not only to the inefficiency, not only are we rebalancing equilibrium, but we're
I'm just saying it over and over so that way it goes in my head, so that way, you know, it just becomes second nature type of thing.
also generating all of this sell side liquidity, right? All of this low, this low, this low, this internal low. We're generating all of this sell side liquidity to set up for a New York continuation.
It needs to take out all these levels, right? All these levels.
To the downside. And if I'm expecting a New York continuation to the downside, I'm looking for manipulation either pre-market or at open. But since we had manipulation before the open, I'm expecting the open to just be the volatility index, which is just going to push us to the already existing drawn liquidity. So came in the market, had manipulation before the open, I'm expecting the open to just be the volatility index, which is
yeah, if there's before the open, price will move impulsively towards the DOL.
which is just going to push us to the already existing drawn liquidity. So came in the market, had great patience. I took 3 contracts. Let me show you guys the executions, and let me show you guys now the trade recording of actually taking this trade live with the team. I think this looks really good. 15-minute fair value gap holding bearish, S&P at the
SMT at the highs, okay, change instead of delivery, just like that, the candle right here, okay, pull back, okay, pull back on this. So he uses a wide variety of top-down analysis time frames. I think he uses 4 hour, 1 hour, 15-minute, 5-minute, 1 minute, all of them. So that's really good because like his main time frames are 4 hour, 15-minute, 1 minute. But he also uses the confluence of what's happening with the 5 minutes. So he doesn't really specifically stay like fixated on 4 hour, 15-minute, 1 minute. That's also good, yeah. Because he sees opportunities in 5 minute as well. That's pretty good. Now that I think about it.
the highs. This 5-minute fair value gap got ran.
Because a 5 minute could be like a confluence because there's added confirmation with 5 minute during the 5 minute time frame. So
To the
that's it.
downside, we've had a change in the state of delivery.
Yeah, so you see these levels are holding, right? Which is a good sign. Okay, so this level is holding right here. So if you enter here, put your stops here. Even at this level, if you enter here, put your stops here, right? You're still getting a
He just
pretty
came up,
good
took this internal high, should rebalance,
CISD right here.
and then start to sell back off here into this range. I want to see us go back to this low, but this is I'm
It's because now we're fixated at this area, right? So
expecting to see it sell side of the curve and get back down in this range. But look at yes starting to sell. Here we go.
okay, so he entered off this fair value gap. This one. Down
1
towards
minute till market open. Already starting to see a move here. We did just put an SMT here, but again, I'm trusting the bigger time from SMT. I want to see NQ start to catch up to the downside here. Here we go. Market open. See if we can get a continuation. I think I'm going to go ahead and put my stop at break even. I want to see just a fast
Okay.
lower here.
That's pretty good. That's a liquid draw.
There we go. First PT taken. If ES takes a new low, I'll...
Dude, this guy is risking so much money. It's actually crazy. I think he's going for like at least $400. The ratio is at least $400. $400 stop loss and 2 contracts. So his first contract is at this level, which is also good. And his second contract is at the very low. It's pretty good, pretty good.
Wow. Okay, I'm done. That is really, really nice. Beautiful, beautiful trade. Beautiful, beautiful trade. I told you we were looking like we want to dump on ES too. We're gonna fall through that daily. Jeez Louise. Why would I wait for the 4 hour rally gap when price action showed me we were going lower? That's the difference. Look at this. Everything needed to go lower got lower. Why do we need to go higher? Because price shows you. Price will show you when we're ready to dump. Not what the fair value gap is to the left of you. We're in a 15-minute fair value gap. SMT got put in place. There's no reason for price to go higher now. 5-minute change in the state of delivery. This 5-minute inverse fair value gap gets ran through. This is our protection. Every time we come into this inverse, we will reject. We reject, we reject. Then we soup this internal high, tap it, and then we sell. We don't need to go rebalance to this. Number one, we were already
yeah.
in a 4 hour fair value gap here. But look at the actual price action.
It's holding this. Takes out the smart money trap. Change its state of delivery. Holding level. Boom. Sell off.
So hopefully you guys enjoyed this video, keeping it nice and sweet and simple on this trade. I'm on a 5-day green streak, I believe. It has been very, very good. We've been absolutely killing it in the community. So hopefully you guys enjoyed. Enjoy the rest of your day. If you want to watch me live trade every single morning, I'll leave the link in the description for our private mentorship. But enjoy the rest of your day. I will see you all in the next one. Peace out.
W video. Oh man. Anyways, pretty good. Yep. So smart money trap is always a must because we see this so this inverse fair value gap, which means this level is holding. This is a strong this is a high, that's established high. So in other words, it's a ITH. Takes out this smart money trap, takes all this liquidity. Change in state of delivery, holding a change in state of delivery is basically a confluence that this level is established now, right? Therefore, any level within this is constantly rejecting prices. That's why we have this first draw on liquidity, which is what storms on first. And then we have these levels, which basically get taken out next. So usually you would go for 2 contracts, find one here and the other one over here. Get out right here, first one. Second one, you exit right here. So worst case scenario, you won't go for this if this is not gonna go the way you want. So I need to learn how to like use contracts because I need to have 1 contract here and then the second one at this low. Because that way I won't lose money. Because if I'm depending on one whole contract for like this whole move, chances are I'm actually gonna lose money because the market's gonna flip on my head at this level. Because that's always how it happens, right? So, and this small move is not gonna be like enough money because this is gonna be like a 1 to 2.5. You know what I mean? So, anyways, I'm gonna try to spot this on the charts, right? Because let's see. See if I can oh my god, this is a mess. I love the way how Justin's thingy is actually so clean and then mine's like a fucking mine's so fucking dirty right now. I can't get rid of it right now because I have some journal. So okay, so we need to see session-based liquidity. So for that I need to see a London session. So first of all, what I'm going to do is I'm going to look. Okay, so London took out the lows, right? London took out the lows. So NY is basically bullish, right? It's holding this level. It this is so confusing because it took out this high, right? It took out this high, it dropped in price, right? Dropped in price. But this level was holding because again, if Asia consolidates, London manipulates, right? And then NY distributes right here. So let me just what's up with this? I don't know what just happened. Let me just grab the sessions real quick. There we go. So Japan consolidates, London manipulates, and NY goes basically continues. Okay. And if we see that confluence happening, yes, it's gonna hold this. And this candle right here, it's a good order block because it held this previous candle's low was taken out, right? So that therefore this is a good order block. And we have this fair value gap, so that's a good order block. Therefore, use this. And honestly, I wouldn't have taken this trade because it's like such shit risk to reward. Look at that, 1.5. So I wouldn't really take that. But what I do want to acknowledge here is the dealing range, right? So the dealing range in this point is, so we're still in discount, right? So you see, I'm seeing a bit of rejections from premium. So there's a likelihood that it's going to be bullish, bearish from now, because the overall bias is bearish, right? Overall bias is bearish. So therefore, I'm expecting price, because there's displacement, there's a death in displacement, even though it might rebalance like one of these levels. I'm expecting price to overall, yeah, see? So now, wait, see how this plays out. So I'm pretty sure this is a smart money trap. This is a smart money trap. Because the thing is, say this previous high, right? This previous high got ran through during NY, just as NY started, got ran through, and then you have the sell off massively towards the sell liquidity draw. If I see, oops, why does it keep doing that? Why does it keep doing that? Let me just get that back. Okay. So pretty much you can see that wait, let me show you guys. Smart money trap, right? NY opens here, goes, takes us out, and then goes, right? So usually London is like the manipulation, and NY is what you trade, right? So in this case, this is going higher, okay? This is not really taking any levels, okay? So this London took out the high of Asia, right? So therefore, if I'm seeing, okay, the idea is, if you see, if Asia consolidates, London manipulates, then NY, if you see a change in state of delivery, NY will hold going up. Flip this around, same story, okay? But the thing is, over here, right? Let me think. So we took out the highs, and we have this, because this is the smart money trap, okay? We have this smart money trap, and then we have this insane sell-off. So it's basically the same thing, except for this change in state of delivery during Asia, during NY, this change in state of delivery, before that, we need to take out this rest in liquidity here, right? So this high gets tackled out, and then you see the market structure shift, a change in state of delivery here, boom, sell off. And now it's going to go for the lows. It's going to go for, this is the first drawn liquidity, so it was hit. Now if we look at this range right here, you can see that this is it's rejecting 0.5, so therefore I would expect price to go lower. If it's rejecting 0.5, see, just stomps. It goes back to retest, once again, one more smart money trap, and then stomps. Okay. So NQ is very, very, very popular for being the smart money trap, right? The SMT, more than gold. Gold is like the least predictable in that sense, but NQ is like very predictable in that sense. See, SMT, boom, sell off. Pretty cool, pretty cool. Let me see. Tokyo. London is probably going to take the lows. And it didn't really take the lows, so it's not really convincing. Let's see if we have a change in state of delivery. We tackled all this Thurston liquidity. Okay, we don't see any inter-range liquidity here. And we have a sell-off. We have an insane sell-off right now. We have this fair value gap, so you can just short the market from here. At this fair value gap, put this here, and short this down towards like a good 1 to 5. Again, depending on the range, let's say about here. But then depending on the range though, so this is the swing low, and this is the swing high. Okay, so this is above 0.5, so I would TP here. Oh, are we getting ran through? Yeah, we got ran through. That's okay. Gotta take the L's sometimes as well, man. So it went here, right? This auto block. It makes sense because this auto block right here, right? This took out the previous candle's low, so therefore this level is considered like an auto block, and the overall bias is bullish. So therefore, let's TP before. See, because this is a pullback in the grand scheme of things. This is just a pullback, and then goes back bullish. Because the continuation move is actually bullish. See, we're going up. Okay, so that's just a bunch of confluences that need to be added. So that's why market structure overall is very important. And if If you see this holding, right, you can target this high. And you see this is discount, this area right here, right? So yeah, this level seems to be holding, right? You can see that this level is holding, so therefore I'm going to buy from here and target not the wicks, but right here. 1 to 10. Okay, that's crazy. I'm just gonna target like a 1 to 5. Yeah, still goes and hits. See? I'm sure this will hit too. Yeah, there we go. Smart money trap, right? Smart money trap once again. 24 hours to hit this, right? Smart money trap, and then we see an inverse. See, so it's just in real line usually like drops to like the 5-minute. Right here you can see that this is the auto block, but you can low-key entry even from like over here once it taps here. You can entry from here, put this here, and then target whatever the lows are. That's this, right? We get ran through, okay. Fair enough. Oh wait, no, that's because the bias is bullish, right? This is bullish, the overall narrative, because we haven't changed the state of delivery, right? We haven't changed the state of delivery. It's still bullish. Right. Because unless we broke like a significant level and had a change of character, we're not bearish. Because I'm pretty sure there's more liquidity to tackle as well. Let's see if there's more liquidity. There's no more liquidity, okay. But either way, if there's no change in state of delivery, in other words, a change of character, it's still bullish. So you can see that this is a good auto block. I would expect this to hold. Nope, not yet. Where is it? Okay, this is not dropping. Okay, there we go. We got the drop. But it didn't hold, so therefore I'm not going for that. Oh my god, this is dropping like crazy. This is dropping like crazy. Okay, so we have a swing low, right? Let's consider this the closest swing low. Swing low to swing high. So I would expect price to drop to at least like this level right here. So let's hope for... Okay, so 0.5 seems to be holding. Okay, I don't know if that's a bad sign right now. Because the price actually, again, that was a bad sign. See? In this case, that was not the best case scenario, right? So let me just get rid of this. We'll pull back down here. If I see a CISD, then I would expect price to be bullish. But I need to see a CISD. Okay. Is it gonna hold? Seems like it's holding, which means now we've switched directions off this auto block. This level right here. We've switched directions. I'm pretty sure it's either off this or either off this area right here. Okay. So we have this change in state of delivery right here. See? CISD. You have this pullback, right? That's fine. Okay. Oh wait, what? Just sold off? That's crazy. That was a fake out? Interesting. Right. So it came to this auto block and then just rejected prices. That's crazy. I mean, it's the 4 hours, so it's fine, right? But yeah, kind of wild. That's actually wild. That is pretty wild. Okay, interesting. Let me turn on the session liquidity. Okay, so we have Asia takes out the high, London takes out the highs, and then you see the change in state of delivery here, right? Doing NY. See the SMT takes out all the people. So NY is always going to have an SMT here. See, this was just a 1-minute market structure shift over here in this range. 1-minute market structure shift, pull back, takes this out, and then look at this. This is such a douchey move. It induces people over here, right, at this 1-minute market structure shift, takes them out, and then goes. That's crazy. That is actually wild. Because not even this is gonna save them. You gotta have your stops like somewhere here. That is wild. That's actually wild. Wow. NQ is wilding. This is the fair value gap. Taps back. You have this. Tap market structure shift. You can use this. Now this is gonna hold, see? Goes and holds. 1 to 3. Oh man, this is cool. So this is the fair value gap. So it's still bearish. So we're still not planning on shorting this market. Whoa, we're still bearish. Let's see. Change in state of delivery. Yep. And we have this level. This whole level. Because this is the candle that took out the low of the previous candle. So therefore, I'm expecting this one to hold. Let's see if my theory is correct. Put it a little below. And target this. Let's see. Oh, wow. Just like that, huh? Interesting. Let's see. Oops. Oopsies. Okay, so this is so 0.5 seems to be holding, see? 0.5 of this zone seems to be holding, and then it sold off. Right. Interesting. So this is the swing low, right? This is the swing low. This is the swing high. This is the swing high. That's number 1. You see 0.5 over here in the current dealing range? This is holding, right? This seems to be holding. And right after the 0.5, it just sold off. See? That's why 0.5 in the current dealing range is actually the best thing you can have. Because if you TP at 0.5, you're pretty much safe of like any of the other malarkey that would happen like right after. Because if you think about it from a longing perspective, 0.5, this is premium. But in shorting perspective, this is discount over here. This range. This area. Anything above this orange line. It's actually very wild how these markets are made. That's crazy. It's actually crazy. Interesting. That's so wild. Okay, so we have an order block. I wouldn't really consider this an order block, but it is an order block after all. This week. If I go to 15 minute, if I see a CISD. Let's see. Oh, man. Right here, right? So you see this CISD right here? So once you see the change in state of delivery at this level, you see this pullback comes down. See the session liquidity. Okay, so we have Australia. We have the low taken out by London and then comes back over here during NY. So the low is taken, but there's no change in state of delivery. Therefore, price continues. So accumulation during Japan. Accumulation during Japan right here, red box. Manipulation during right here. Manipulation during London. It's not really manipulation, isn't it? Yeah, there's no manipulation. That's crazy. Oh wait, no, there is a manipulation because this is where London starts, right? And then it sells off. This is Asia's low. This is Asia's low. That's crazy. Okay. So London manipulates, right? London manipulates because this is where London starts. Asia's low taken out. Comes back in range. Smart money trap, right? NY open. This is where NY opens. Smart money trap to induce people as much as possible. Because that's how NQ moves. Smart money trap. You have this order block which is still holding, right? This one is perfect because this one's high was taken out. by this one. Smart money trap, market structure shift. Ideally, I would entry from one of these spaces, one of these pullbacks, but it doesn't really pull back. So therefore, I would look for an opportunity in the 5 minute because it doesn't really pull back on the 15. So I would look for not this. This doesn't really hold. Something like somewhere here, right? Once the CISD happens, even off the CISD, I can entry. Like right here. Because I have all that other conviction from the top, right? So I have the confidence I need at that point, so I can just execute now. Where is it? Where the hell is it? Where was it? Okay, it's here. So to where is the question, right? So you could arguably take it here, right? But the thing is, this is the swing low to swing high. Again, same theory. Swing low to swing high. If I get out before 0.5, I'm free of any problems. But that gives me shit risk to reward because this is a 1.9. So 1.84 if I'm getting a equilibrium exit. So at that point, I wonder if it's really worth taking this trade. But because this is the order block, right? Because this candle took out this candle's high, right? Therefore, this is a liquidity sweep. So therefore, this is a valid order block. So even if it pulls back, it's pretty much like this level is valid. So I could at most refine this trade to give me a little more than that to maybe over here. That's 1 and 2, 2.1. It's still not worth it, right? So, because this is equilibrium right here, current dealing range. This is the swing low, swing high. 50% of this dealing range. So it's still not worth it somewhere here. Because it just sells off, right? So, yeah, it is what it is. Oh, interesting. Let's see what it does. It's selling off. Okay, London opens. It's consolidating. I'm expecting a manipulation. Let's see where it manipulates first. Okay. We see a manipulation during London. It doesn't really manipulate, is it? Yeah, it doesn't really manipulate. This is just a pullback. Comes here. I'm expecting low-key, I'm expecting because this one's high was taken out, change instead of delivery, right? So I'm expecting NY to hold bullish. Let's see if that is true. Because this whole area becomes a order block at the point. This whole area becomes an order block at the point. Let's wait for some sort of pullback. Okay, seems to be. Okay, interesting. Okay. Cool. Let's see. Yeah, see? This one, this candle took out the previous candle's low. Therefore, yo, what's up? What's that? Abilium? Yeah, Abilium. What's up, man? I can't pronounce your name right. Sorry. Right here, this range. Then you see this change in state of delivery. So therefore, I would expect price to hold maybe like a 5-minute inter-range liquidity. Yeah, something like this. Hold. You see this dead thin displacement? Okay, smart money trap. Okay, interesting. Smart money trap takes us out and then it goes. Right? Smart money trap. That's crazy. This one holds. This one is holding. So I put this, but at that point it's not really worth it. But we could long up to like the 0.5. Nah, this is way too much. I don't think this will hit. I don't think this is gonna hit. Yeah. That's kind of common sense in a way. It's okay. I'll count this as an L on my books. Yikes, dude. Yikes. Okay, so we have this low taken out by This one's low taken out by this, so therefore I would expect to hold. Let's see how this. So this is the current dealing range over here. This is swing low to swing high. So therefore, I would expect price, because this is equilibrium. I wouldn't expect this to be my entry, even though this is also a good entry. This is not gonna be my entry. This is gonna be my entry. Even if it drops, I'm not. See, took me out. Even if it drops, I'm not taking that. See, smart money trap takes you out and then goes. Because if you think about it, over here, this is a market structure shift. But then what does it do right after? Just sells you out, even though this is a valid order block. See, takes out the previous candle's low, valid order block, has the fair value gap. But what happens after the market structure shift? Inducement takes you out. So I would expect. So now that this is the high, right? This is a new dealing range over here. So now that this is the dealing range, current one. Let me just get rid of this for now. Because this is the dealing range right now. What I'm gonna do is I'm gonna wait for a discount entry. For a discount entry, I need to wait for this. So let's wait. Let's wait for a drop. London manipulates, NY drops, right? NY drops. So we have the Asia consolidation, London manipulation, and Asia drop. Okay. This is the SMT. Previous high. Previous high was taken out. SMT. Drop. 5 minute. Let's see the 5 minute. Okay, so this is the previous candle's high was taken out by this one. See this fair value gap? And then you see this protected high. So if you entry off this fair value gap after the market structure shift here, you put your stop somewhere here. Then you target the extreme draw on liquidity because this is the 5 minute. You can either target this one or even this one, right? They both got hit. Again, I wouldn't target this one because this is too far away, right? But I would target this one at most. This level. 4.11. That's still pretty good. But it needs to align with the overall bias. Let me confirm with that. The overall bias is bearish, right? Yeah, so if the overall bias is bearish, there's a higher chance that it's going to hit the full TP, because overall we're headed towards that side, even though this is a pullback. So that we see from the higher time frames. Let's see. Let me just you see, this is the pullback towards this candle and sells off. See the weekly. See what's up here. Took out the lows over here. Interesting. Okay, so this is the order block. This whole area is an order block at this point, because this one is not. This one is the candle that took out this one. So manipulation, distribution, run on liquidity, buy side liquidity, run on liquidity, pull back, right? So let's see what it does next. This is the weekly profile. So it came back to this range. This is the order block on the weekly. And then now it's headed towards the ups. So this is an order block once again. Good order block. Let's see if it holds. It seems to be holding, yeah. Aiming for this. Okay, so it's almost there. It's gonna take this out. So even if it has a pullback, it's gonna pull back to this range. Keep in mind, this is the candle that took out this one's low. This one's low was taken out by this one. Therefore, this is the order block. Even though this is the candle next to the fair value gap, this is the order block. Okay. Order block. It's going to pull back here and then go here. Oh my god, this is super messy. Holy shit. So yeah, that's how to stay safe in these markets. Yes, sir. Man. Oh my god. That is crazy. 1 o'clock. 1 o'clock. See, SMT, CISD, pullback on the 5-minute pullback, and then attack, just like that. This combined with time, right? Time will help you win. Let me go back to the Canva. Yeah, this combined with the... Let me show you guys. Is my design gonna be gone? I didn't save it, I'm pretty sure. Did I? Oh, shit. Yeah, doesn't save that. Man, that was a pretty good design. If you guys want to check it out, just rewind the stream. Pretty much I was just drawing like the whole idea and some other stuff. Yeah, that's life, dude. SMT. This is a internal term high. Swing point over here. SMT takes you out, takes out all the traders who saw a fake out over here. So you see some sort of like this thing. SMT takes them out. Sorry, before that. So let's say this is a high. You see right here. Sorry. Yeah, so one of these. And it takes you out. Smart money trap parallel to this SMT. And now we have the real move. You can put your stop here, SL here. And then once you see this, you can entry after the entry after 1 minute market circle shift. And then TP at the sell side liquid draw. This is if it's aligning with the whole high time frame narrative of being bearish. High time frame is going that way. Yep. And that's pretty much how to make money. You just wait for an SMT and manipulation and inducement. Don't wait for the first 1 minute market circle shift. Don't entry on it. Entry on a pullback entry. Pullback on the continuation. Don't entry when it's first doing stuff, okay? Especially this SMT is usually very apparent during NYAM session. Like before, like as soon as NYAM session starts, if SMT is not taken out, or a swing high, in other words, is not taken out, that means it's probably going to take you out. You know what I mean? So just make sure you wait for SMT to be taken out and then go, right? Because SMT must be taken out. This is a previous high. This is where you want to entry because this is part of the continuation, right? Now we've established this SMT and this market structure shift or change of character as you may. And then this 1 minute market structure shift is going to prove to you that we are in fact going there. Stop loss here and then take profit at the sell side liquid draw. And you want to make sure there's a 0.5 as well. 0.5 premium discount. If you flip it around, this is discount and this is premium. So again, TP here. Depending on if it's holding bullish, you hold to 1. If it's holding bearish, you want to hold it to 1. Just like that. Okay. So again, there's a high likelihood of getting swapped out in this area if you entry from this area. Because what happens is in every current dealing range, what happens is this is 1. Oops, this is 1. This is 0. What happens is in every current dealing range, if you entry from premium, let's say you were going bullish, but you entry from premium, right? In the current dealing range, previous swing high to previous swing low. What happens is when you entry from here, let's say you entry somewhere here, somewhere in premium. Sorry. So you entered, let's say at like 618. So what happens is you get taken out and then it goes. There's a high likelihood of that happening. Why? Because it's in premium. You want to be extra attentive as SMTs during premium times. It's not that you shouldn't trade during premium, but you want to be extra attentive as SMTs because that's when inducement mostly happens. So unless you have extra confluence during premium, that you don't want to trade, right? Because this is something that happened to me many times in like a dealing range. So you want to spot the dealing range, right? So right now, Like this is the type of situation that I actually don't really like. Like if you look at this is such a weird dealing range. It's in the middle of nowhere. But if you guys can see this, we don't have a change in state of delivery, so therefore we're still bearish. We're holding bearish. So we're probably going to use this one to go even lower. So this is currently where we are. This is a good order block. This candle took out this one's high. So therefore this is a good order block. We see the rejection. You don't want to entry here. You want to entry off a pullback in this range. Take it towards this. That's pretty good. That's pretty good. So an SMT and time and 0.5 in the current dealing range. That's what we need. Plus order flow, of course. High time frame order flow. Yep. And we're good to go. That's pretty much good info. Thanks, man. Seth Reed, what's up, man? Ah, man. Okay, so I get taken out a lot. Yeah, same here. I'm trying to like improve as well. I'm like trying to like, cause I make a lot of mistakes in my trading as well. It's like my entries aren't good, I think. Right. If you could send me like on Discord, if you could send me my username is like the same thing as my like send me your username. It's like it's basically Veloxo with like all simples. I'll accept your request if send me your username, by the way. If you can send me like a screenshot of like a trade that you took, then I might be able to like tell you what's up. Cause in my case I'm like slowly starting to become like decent at identifying where I'm getting things wrong, right? Yeah, let's see. Again, this is a game where only 10% win. Like, I'm not even joking. 10%. That's like such little compared to like how many really trade, right? So, yeah, it's a scary game, but you just gotta do it, you know? You just gotta do it, man. So, this is a whole order block. It's still holding. Therefore, if I see a change in state of delivery, that's when I would expect price to really move. Change in state of delivery. Now I would expect price to move. 0.5, that's where I would exit. I see obvious signs of rejection at this range, right? Therefore, I would expect price to go lower. It doesn't, okay. Let's go. Let's go to 5 minute. 5 minute is also pretty good now that I think about it. The 5 minute does like a pretty good job of justice. Matt, I just found you. So I'm not in your channel yet. Oh, no problem, man. I'll send you a request. But yeah, this is my first month trading future. Really? How many years or months have you been like trading in general? I started in March this year. Somewhere in March. Thing is, like, if you trade on like the lower time frames, like more people, like what I'm seeing is like a lot of people who trade only on the lower time frames, like that's like the key to unprofitability. Even if you have like the best SMCs, ICTs, all these concepts, like if you trade lower time frames, you're pretty much gonna be in that losing streaks. You know what I mean? So you need the top-down narrative. So this is holding, cool. The 0.5 seems to be holding, which means there's a high reasoning as to the fact that we will most likely hit this. Let's see if that is true. See if that is true. Let's go. Consolidating. I've traded stocks since around 2017, but I didn't like it. Futures is much up. Right. Since 2017, really? Damn, that's like what? 7 years? Yeah. Almost 8 years. That's crazy. Right. Like, what's your experience like overall during the 7 years or 8 years almost of like trading? Because, dude, if you trade for 8 years, that's like, you would have like, you're definitely like profitable, right? But I don't know, like, there's stories of like people unprofitable, like even after trading for like a long time, like 15 years. I know I heard the story about someone being unprofitable after trading for 15 years. That's crazy, dude. Yeah, I've been very on and off since then because I lost all. Okay. What made you like so like when did you stop and like why did you stop? I mean, I get that you didn't really like it, but like when did you like stop and then think maybe I should get back? And like how long did you like trade when like total how long have you been trading for? Because dude, imagine 16 years of being unprofitable. That's crazy. That's like there's no way that's possible. You gotta be just like 16 years of just doing nothing and being unprofitable. Because that's like the only way you can be unprofitable for 16 years. This is the fair value gap. Go low. Around 2020. Okay. So you have 3 years of experience even till then, right? And just got back into it recently. Right. Like what's your experience like with trading for 3 years? Like from 2017 to 2020? Like what would you say is like the because being unprofitable, like the thing is like it's okay to like make money once or twice, but like the risk management is like the hardest part, dude. Holding on to that like money that you make, because this is like one of those games where you just have to hold on to like what you make more than like what you make, you know. Like it's harder to hold on. So this is are we bearish? Yeah, I think we're bearish, right? Can't tell right now. Yeah, we are bearish. Yeah, we have changed. Okay. Yeah, so in a bearish context, what I've noticed is the fact that any of these order blocks are more likely to just basically drop on your head. See, I would have full TP'd, but I can't full TP because it's gonna drop on my head. Yeah, my losses are right. Definitely bigger than my wins. Right. That's the thing, right? So the thing is, did you like keep journaling, by the way? Like every trade that you took, like did you understand like why you lost, where you lost? So that's why I'm with a prop firm right now. Right. The prop firms, I don't know when prop firms will launch, but I've been using Maven. Again, I'm not affiliated to say this, but that's like the cheapest one I could find. And like a few of my friends were like, that's actually legit. So I was like, you know what? Like it's like $15 for like a 2K account, right? So I was like, yeah, hell yeah. Even if it's like a scam prop firm, like it's okay because like I just want to like get my, I don't think they're scammers, but I just want to like see if I can like pass a prop firm because I failed like 4 or 6 different accounts at this point, and I don't know. Like I'm still, I'm still going as even though like I failed like 4 or 6 accounts, I think somewhere around there. And like I'm on like my 7th account at this point. It's okay. It's alright, man. Because the thing is, like, at the end of the day, like, the only thing that really changes is, like, the number at the back, you know? Like, if you can pass a 2K account, it's almost the same thing as, like, passing a 10K account, like, 100K account. It's just that you have, like, a static amount of money that you risk with every trade, right? So, like risk management plan wise, like, if you can pass, like, a 2K account, that means if you buy like a 10K account and risk 1%, you're still pretty much good to go. Because that's what got me like thinking like if I can pass a 2K account, that means like if I'm confident with a 2K account, it's just the zeros at the end that add up when I'm trading with like a bigger account, you know. So let me top sip right now. $50 for 50 grand account. I'm down like 600 on it right now. I'm learning slowly, but my losses seem to be getting bigger, which isn't good. I think what you should do is journal, okay? And I think what you should do is don't go for big size accounts. Try to pass like a small account. Just again, like I was saying, right? If you can pass like a smaller account, I'll have to screenshot some trades so I can send them to you. But I scalp a lot, right? So scalping, I don't know if scalping is the best option, dude. I think what you can do instead is probably go for like 4 hour, 15 minute, 1 minute, because I think 15 minute has to be like the lowest you should be going. Like that's just me, like personally, like that's what I feel like. Again, some people say that's also what you gotta do, because I feel like anything lower than 15 minutes is like when things start to go in like the opposite ways, you know. Because like I traded like any trades that I took purely off 5 minute never worked out. It always like drops it. It is always, this is like a prime example. Yeah, I think what you should do instead is don't go for 50k accounts. Just go for like have a proper risk management plan. 1% every trade, 2 trades a day. Risk 1%. If you're going to draw down once, then risk half that. If you're going to draw down twice, I mean another if you lose another trade during drawdown, go for 25%, right? Sorry, 0.25%. Don't I think what you can do is just buy a very small account. Don't buy like a big one, because right now I'm taking the challenge on Maven, and it's just like a 2k account, because I know for a fact if I fail, even if I fail this account, I'm fine, you know. Like, see, I'm down with this. So these are the amount of accounts that I've failed so far, except for this one. This is like the current one. So these are all like 2k accounts. It's like $15 for one of these. So the thing is, like, it's not even about the payout, because like at the end of the day, it's just like the 0 at the end, you know what I mean? Because if you can pass one of these, then that means you can use the same sort of risk to reward and same sort of risk management plan on a bigger size account, and then, you know, pass it. Because at the end of the day, it's just the zeros at the end. So look at it like that. I think that's like the best thing you can do. Dude, it's 120 right now. Holy shit. It's actually 120 where I live. No way. Okay. I think I might have to go. But I'll definitely send you like a friend request. Okay. If not, if I don't send you a friend request, please send me a friend request. It's Veloxel, like literally this dude. Like literally just Veloxel, just like this. Yeah, that's pretty much a good price for those. How much to pass those accounts? I think it's $15 for Maven trading. Again, I don't know if Maven is if it's like a legit prop firm, but this is like the cheapest prop firm that I could find. A few of my friends said it's okay. They said there's no problem with like a payout, but as far as like I didn't really like depend on like if I can get a payout. I just wanted to get like an account that's like maybe I could try passing it, because it's like $15. I'm using this one. Like $15 for like a 2k account, I think. Yeah, 2k. 8% is like drawdown rules as well, so you want to be aware of that. So yeah, this is what I bought right here, and I use C Trader right here. This is what I use to trade. So overall, pretty decent, but not too convincing right now, because I had a few losses. So yeah, it is what it is. But yeah, we're still in the green, so that's fine. Cool, man. No worry, man. No worries, man. Sorry. I'm just like very tired right now. That's why. Pretty much university and all that. So I sent you a friend request for sure. I'll check it out. I'll accept it right after the stream. Okay. Where is it? What was it again? Met50. It's this one, right? I think it's this one. Yeah, anyways, I think it's this. Let me just, yeah, all good, right? I'll just accept both of them. Anyways, I'll talk to you later. I'll be streaming tomorrow as well. Hopefully maybe earlier than this. But yeah, that's pretty much it for now. Thank you so much